Manasa Consumer hits a 20% lower circuit after second quarter numbers disappoint the street. The company reported loss-making second quarter with revenue and EBITDA declining. Mamaearth also grows slower than expected. The stock has fallen below its issue price of 324 rupees.
Metals provide support to a gloomy market. Nifty Metal Index gains close to 1.5% after China announces an end to export tax rebates for aluminium and copper prices. The aluminium makers are surging in trade. Nalco, Vedanta and Hindalco all gaining between 4 to around 8%.
Well, the city gas distribution companies, we have IGL, MGL, Gujarat Gas, all of them down between 5 to 18% as the government has lowered the APM gas allocation by 20%, marking the second straight month of allocation cuts. Brokerages Jefferies and JP Morgan issued downgrades on IGL and MGL.
Hero Motors surges after earnings marginally beat estimates in the second quarter. The company also recorded its best ever festive season sales numbers. Explains why the stock is up 4.5%.
Muthoot Finance up around 5%, closer to 6% now as strong AUM growth continues in the second quarter. The management has raised their FY25 loan growth estimate to 25% versus 15% and tells CNBC-TV18 that gold loans are picking up with higher regulations on unsecured loans.
Hello and welcome to Chartbusters. I'm Nigel and with me is Banglam. We don't have much luck today in terms of a bounce back. The Nifty is still down 130 points. The good news, though, is we have come off close to around 50 points from the low point of the day. But we've got a couple of managements with us, so let's get straight to the first one. Glenmark Pharma, they reported a profit of around 350 crores. They recorded a loss in the second quarter of the previous fiscal. The revenue is up close to 7.5%. They've given their margin guidance as well for the way ahead. To understand more about the way ahead, we are joined by Mr. V.S. Mani, the company's executive director and the global CFO of the company. Hi, Mr. Mani. Good morning and thanks a lot for joining in. Well, let's focus on 2 points first. Your margins in the first half of the year were a little south of around 18%. But for the year, you're guiding for margins of around 19%, which means the second half of the year margins will be better. Tell us the factors that will drive this margin, a better margin in the second half of the year, point number one. And on the US sales, well, it's been more or less flattish or a little bit gloomy out there. And now we have a new president-elect in the United States as well. But you believe growth will come back?
Yeah. So thanks for the question. So first and foremost, I think the first half we had a good set of numbers. While the sales grew at about 7% plus, our margins have been closer to about 18%. The second half, we expect that we have a number of respiratory approvals, products awaiting approval. So we expect that that should help us to kind of improve our margins. Also, Ryaltris continues to get, that is our main product that is doing well in the segment across various geographies. That also continues to get approved in a number of other geographies. So all in all, we expect with that to go closer to the 19% that we have guided for the current year. I think, and also the India business continues to do quite well. So I think taking all these factors into account, I think we should come closer to the 19%. As far as the US business is concerned, last couple of years, we didn't have many key launches. And while the erosion is still at about 5% or so, we expect that with our respiratory approvals that we have filings for both nasal sprays as well as MDIs, we expect some of these approvals to come through in the next 6 to 9 months. And that should help us to kind of improve our sales as well as our margins in the US as well.
Right. Mr. Mani, let's talk about the individual opportunities itself. You did speak about Ryaltris. I wanted to understand what's the run rate been in the second quarter? What's the outlook for the next couple of quarters on that one? Because you did indicate a potential of almost $200 to $300 million over the next 3 to 5 years from that, drug. And the second one, you said respiratory approvals are likely in the next 6 to 9 months. Of the 4, how many are likely to come by? And what would the run rate on these, products be once the approvals come by and the scale up there?
Sure. So as far as Ryaltris goes, as I just alluded some time back, we already are approved in about 41 countries and we're looking at about another 11 countries in the current year. In the current quarter, we've done about $20 million. In the first half, we've done almost $40 million. So this is almost the second year since the launch. It's almost an $80 million product. So I think the way things are going, we are on course to touching the 200 million that we did indicate some time back, as well as on our investor day. So I think all in all, with a couple of key geographies further, getting good product having to get approved, I think this trajectory looks good to reach there. As far as the respiratory other products are concerned, we have a couple of, as we have already said, that we have about 4 products waiting for approval in Europe. We hope that it will happen in the next 6 to 9 months. As well as in the US, we have filed for respiratory products for the nasal sprays, as well as for the MDIs. The Flovent one also we're expecting the approval. So I think these should do decent sales. I mean, hard to put a number on them, but I think these overall the respiratory segment has done well for us.
All right, you don't see new president-elect, President Trump, to be a risk to your business? I'm looking at your North America business. It's degrown by close to around 1% on a year-on-year basis, and on a quarter-quarter basis as well as down close to 5%. Mr. Trump can do anything, but for your business, do you see it as a risk?
So I think obviously price erosions have been part of how the US market has been over the years. But I think over the last 10 years, the industry also seems to have learned a lot of things, how to kind of, put the product approvals, do things in the right time. So I think obviously there will be erosion, but good product approvals will help us to do better sales. And as we said even earlier, that last couple of quarters, we didn't have many new launches. But going forward in 6 to 9 months, we see some better launches coming through, and that should help us to do better. Yeah.
All right.
And also, just to add,
right.
would like to add that we have about 8 injectable products also in the US market now. So I think we have a few good products out there. I think it should help us to sort of sustain the sales.
All right, we've spoken about US, we've spoken about Europe, we've spoken about a couple of products. Let's come back home now before we end this conversation. Mr. Mani, India, 14% revenue growth in the second quarter. Some of your hero products out here likely to be, what the street is most excited about is liraglutide and the GLP-1 opportunity. If you could give us a sense of how, developments out there are panning out, and what really is potential revenue from these products for you?
So let me just give a little, sort of outlay of the Indian business for us. So I think over the last few years, we've been growing ahead of the market. So in the current quarter also, we've done almost close to 13.9%. Even if you take MAT September, we're at about 13.1%. Vis-a-vis the IPM growth of 7.6%. So we're almost at like 1.5x the market. So I think basically our, our products are doing quite well, and the therapies like cardiac as well as basically derma is doing well, though acute respiratory, there is some slowdown. As far as the liraglutide is concerned, we just launched the product some time back, and I think it's like other GLP-1, this is having a good reception from the basically from the medical fraternity. Difficult to put bigger numbers on that, but I think overall the opportunity of GLP is more than 1,000 crores in India, so I think we should do well in this product. Yeah.
How well? If you could give us a sense.
Difficult to put a number on that as of now, but I think we feel that it should do better. Yeah.
And is the Ichnos stake sale, away for good, or you are still considering that?
So as we just said, our IGI, we have a good product, ISB 2001, and our team in IGI is going to basically present it at the ASH conference for the basically the data, various data points that are there on that. So I think all in all, we expect that this is good news for Ichnos. So I think we'll take it as the time comes by. But obviously, if the products if this does well and able to get good partnerships, so there could be a time in future we could do a stake sale. Yeah.
Okay, all right, Mr. Mani, appreciate you joining in. In fact, today your stock is outperforming what the market is doing because it's down only 0.4% while the markets are seeing a lot of selling pressure. Sounding optimistic about the second half of the year. We'll track these numbers and we'll quiz you at the end of the coming quarter as well. Well, time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra of moneycontrol.com joins us to talk about a stock that is tracking closely. Jitendra?
Hi, thanks. Power Grid, despite subdued performance in Q2, is well positioned for long-term growth through strategic expansion in India's T&D sector. While during Q2, revenue growth remained flat on a year-on-year basis and EBITDA saw a marginal 2.1% decline due to reduced capitalization and stringent O&M norms set by CRC. The company managed to sustain net profit growth of modest growth of 0.3% increase. This was obviously bolstered by a significant 116% rise in other income and of course dividends from the subsidiaries and cash reserves it has. The company has raised its capex guidance for FY25 to rupees 20,000 crore and it plans to reach 25 to 30,000 crore in FY26 with a target of rupees 40,000 crore by the end of FY27. Further, Power Grid's project winning rate, which is close to 50%, position it well for the cumulative capex opportunity of close to rupees 3 lakh crore until 2032. This strong capex trend is supported by companies' growing order book. The company is anticipating project opportunities of worth around 1.5 lakh crore over the next 7 to 8 years. Stock has corrected recently. It is trading at approximately 3 times its estimated FY27 book value and offering a dividend yield of close to 4%. Overall, Power Grid is set to benefit from India's expanding infrastructure and the T&D capex, making it an attractive choice for long-term investors.
Right, with that, we'll slip into a short break. On the other side, we have the Vice Chair and MD of Sammaan Capital, Gagan Banga, joining us to discuss their quarter gone by. Stay tuned for that conversation. Welcome back. You're watching us here on Chartbusters and CNBC-TV18. We have a guest with us in the studio after a very long time. Gagan Banga joins us in our studio. On the earnings radar is Sammaan Capital. The company reported stable asset quality in the second quarter, though it reported a net loss because of increased provisions. So let's take it straight to Gagan on all those parameters itself. Gagan, I'm looking at your numbers, but two things stand out. One is the acquisition that you've made of Sammaan Finserv for about 5,500 crore book, and your provisions that has increased significantly at around 4,500 crores. What explains this, and what are the pain points out here? If you could explain why the provisions were so much higher, and the loan book as well.
So these are not technically provisions. What we've done is that we've tried to isolate our subsidiary, Sammaan Finserv. So over a period of time, it will become sort of a mirror image of the parent. Its core capabilities are around affordable housing related lending and the semi-urban type of MSME lending. So to isolate that company in order to be able to focus on that in the future, we acquired all the legacy assets and consolidated the legacy assets on our balance sheet, which is Sammaan Capital's balance sheet. While you run the process, you got to make sure that it's done at arm's length. There's a fair market value. So basis cost of capital of external parties involved, the duration risk, the credit enhancements, etc. The fair market discount came at about 2,500 crores, which has nothing to do with the credit quality per se. This 2,500 crore discount, since the parent chose to acquire, moves to the parent as a general provision pool. So that's just a flexibility which is available to the parent to utilize at any point of time here on. What stays in the subsidiary is a 5,000 crore AUM, which is completely cleaned up. It has a residual NPA of only 25 crores. So that's the degree of scrub which was done. So we did a scrub at the sub level, at the parent level, figured out what the proposed credit cost could be in due course of time, realized that we were already provided enough. So this was a good time then to do this transfer and allow growth to come back.
Okay, all right. Hi, Gagan. Good to see you in the studio after a while. Give us a couple of details. And if I'm looking at the absolute, AUM number, that's the lowest I've seen in multiple quarters. Could you tell us what is the growth outlook from here on? How do you see dispersals shape up? And also give us an idea about your credit cost guidance from here on.
Sure. So as we were going through this whole, so to say, internal restructuring,
yes,
we also chose to use the same time. You can't be doing non-operating stuff every quarter. So we chose the same time to utilize some of our provisions, which we had built over a period of time, and do a cleanup in terms of sales to ARCs, write-off of assets, etc. So that has resulted in a net 3,000 crore reduction in the AUM. What we've also been talking about is that the business should be viewed in two different buckets. One is the legacy book rundown, which we had started the year with 38,000 crore stock. Within the financial year, we've been able to run it down by as much as 8,000 crores. Just in the last quarter, we had cash collections of about 3,100 crores. So that rundown process is going about very, very smoothly. And now with so much of a provision buffer available to us, I believe we can also accelerate this process quite meaningfully. We are looking at another 10,000 crore reduction in the book in the next 12 months. So that's the speed with which we should be able to run this down. And the idea is that by end of fiscal 27, this is a single digit contributor in terms of the overall AUM.
Right. Just a couple of questions then before we wrap this conversation. You've given us the credit cost guidance of 80 to 100 basis points. What gives you the optimism out here at a time when everyone else is talking about, some sort of pain point in asset quality? And you did speak about you having run down the legacy book. All things considered, what is the AUM that one should look at over the next couple of years?
We will be looking at an AUM of, by the end of next year, 75,000 crores. And the year after that, we should be looking at something around 90,000 crores of consolidated AUM, which includes the AUM of the subsidiary. So that's the broad guidance that I can give you. Our typical credit cost over the last few years has been in the range of 125 to 145 basis points. But we are also now sitting on imputed provisions of about 10,000 crores. On a legacy book of 30,000 crores, that's already like 30% provided. How much more do I need to provide? So in that sense, the 80 to 100 basis points guidance is given more for incremental business. As we do step up our affordable housing piece, that's the type of a credit cost which is expected from there.
And would you look to, at some point monetize your affordable housing book? Because it's currently 5,000 crore. You say it's clean, but, would that give you an opportunity to perhaps at some point look to and unlock value here?
Give us a timeline and give us what the AUM should look like of this.
And the price as well.
So first on your part that I claim it's clean. It's clean that it's got NPAs of only 25 crores, zero overdue assets. Anything which was even 1 day past due has been provided for. So can't be cleaner than that as a starting block on a starting basis. We've got to first ramp up the disbursals. The company so far has been sitting on disbursals of 250 crores a month, more from an incubation perspective. That should rise to 500 crores a month by March. And sometime in the second half of next year, we should reach a run rate of 1,000 crores. That's probably the more appropriate time. When your AUM is north of 10,000 crores, your monthly disbursals are north of 1,000 crores. That's when perhaps proper price discovery will happen.
And what percentage will you all be looking to unlock value?
We're not looking at it from a capitalization perspective. The company is extremely well capitalized. Today it's running on a debt equity of 1:1.
So it'll be trying to get a valuation.
Yeah, it'll be strategic capital. And when it's strategic capital, it depends on whether they want 26 or they want control or whatever. We do appreciate the fact that this will require a partner. And we at that point in time should be open to any configuration.
And the rough valuation would be 1 times AUM?
1 time AUM.
All right. Okay, all right, Gagan. Appreciate you joining in. We'll hold you to these numbers for the time being. The street appears it's looking through the past quarter. Looking ahead explains why the stock has recovered from the day's low, currently up close to around 3%. Well, on that note, though, we'll have to slip into a short break. A small programming note, though, as we do that. 11th SBI Banking and Economics will get underway this afternoon. Cash Finance Minister Nirmala Sitharaman addressing the gathering at 2:45 p.m. today. Other guests include the Finance Secretary, Mr. Nagaraju, the Revenue Secretary, Mr. Malhotra. You have Chief Economic Advisor, Mr. Nageshwaran, and IRDA's Mr. Panda, and ex-SEBI Chairman, Mr. Damodaran. All of them join them later on. Catch this exclusive coverage of the event only on CNBC-TV18. Welcome back. Well, the markets are still down. The good news, though, is that we're seeing some kind of recovery from the low point of the day. And the index on top of Mangalam, well, that's in the green, and that's the Nifty Bank trying to put in a bit of a fight for the bulls. So let's see how that goes. The mid-cap index is, well, doing a relative outperformance. The breadth of the market is still in favor of the number of stocks declining. But the mid-cap index is also trying to make it into the green. So let's see how that goes. But on that note, we'll wrap up on this edition of Chartbusters. The team of Trading Hours is waiting for you on the other side.